You will need just 1 minute to find significant liquidity zones on any Forex pair. In this video, I will teach you how to identify supply and demand zones easily step by step. Like this video, subscribe to my YouTube channel, and learn to spot the zones that most traders miss. As the examples, we will analyze two different Forex pairs. In the first example, we will do the analysis of liquidity zones slowly, so you could learn the process. The first thing that you should understand about the market liquidity is that the market liquidity is not equally distributed among all the price levels on a price chart. Instead, there are specific levels and the zones that will attract the market liquidity. And some price levels and the zones will be low on the market liquidity. By the market liquidity, I mean the market orders, the selling and buying orders. By liquidity zone, we will mean an area or price level that attracts high volumes of the market orders. Liquidity zones that are below current prices will be called demand zones, and we will assume that buying orders will accumulate within such zones, and liquidity zones that are above current prices will be called supply zones, and we will assume that selling orders will be distributed within these zones. Traders, for more free trading education, exclusive market analysis and tips, do not forget to subscribe to my Instagram. The link in the description below. One of the simplest and reliable ways to identify liquidity zones is to analyze a historic price action. You should analyze a recent historic price action and identify significant key levels that the market respected. The levels from where the price strongly bounced or dropped in the past. If we analyze the price action on a EuroCAD pair, we can spot multiple important horizontal key levels. Right here, you can see that we have a bunch of historically significant key levels from where the pair bounced in the recent past. And why did the pair respect these levels? Because buyers were placing their buying orders on these levels, and when the market was approaching these levels, sellers started to close their trading positions. It created a bullish imbalance, and for that reason the price bounced. You can see that these levels are clustering and these levels are lying close to each other. In such a case, what we do, we unite all these levels into one single area, and we will call that zone a demand zone, the zone that concentrates huge volumes of buying orders. And we will assume that buying orders will concentrate on every level within that zone. During the demand zones, the main problem is to correctly identify the boundaries of that zone, to identify its high and identify its low. During a demand zone, I recommend picking the lowest low as your low of the demand zone, and the high of the demand zone should be the lowest candle close. Here it goes, and our demand zone on EuroCAD will be like that. After that, what you should do, you should clean your charts and remove all these levels from your price chart. And we have more demand zones on EuroCAD lower. You can see that here we have a significant price level from where the price also bounced, and that demand zone right here will be a single level beast. It was respected just one time in the recent past, but a bullish reaction from that was very significant. To draw that properly, we will need to take the lowest low of that candle and the candle close of that candle. That will be your second demand zone. And we have our third demand zone on the left. It is based on the price levels right here. And again, this demand zone is going to be based on a cluster of key levels. And during that, the low of that demand zone will be the lowest low, and the high of that zone will be the lowest candle close. After we draw this zone, what we do, we remove all our key levels from a price chart. And we also have one more demand zone right here, but it is the breakout based demand zone, and we will discuss it later on. For now, let's discuss the supply zones. Supply zones will be the areas where the selling orders will be distributed, and the supply zones will be the liquidity zones that are above current prices. The first supply zone that we can easily spot is based on a high right here and on that historic resistance. Drawing a supply zone that is based on a cluster of key levels, the upper boundary of a supply zone will be the highest high, and the lower boundary of that will be the highest candle close. So here is gonna be our supply zone. After we draw that, we remove our horizontal key levels. Once we identify the supply zone, we will assume that selling orders will be placed within that entire area, and all the levels within that zone will concentrate the selling orders. Once the price approaches that zone, higher it goes within that, the more selling orders will become active. A bit lower, we have another supply zone. It is based on that high, it is based on that horizontal resistance, and on that horizontal key level. We have a supply cluster based on 3 significant price levels, and drawing that, our upper boundary of that supply zone will be the highest high and the highest candle close. That is our next supply zone. Now let's discuss some specific cases where newbie traders make mistakes. Remember that with time, liquidity, supply and demand zones lose their significance. And it is very important for you to understand the exact moment when a significant supply or demand zone is no more significant. You can see that over here on EuroCAD, we got another significant liquidity zone that is based on a lot of different key levels clustering close to each other. And that entire area was a significant supply cluster. But we don't keep it on our price chart for one single reason. You can see that with the recent price action, the market violated that cluster and the price went way above that. And now we see that the price is falling and the market is now trading below that area. You can see that that structure lost its significance, and it looks like the market participants stopped placing their orders within that area. For that reason, the price started to ignore that zone. Buyers ignored that when the price went up, and then sellers ignored that when the price started to fall. For that reason, we consider that zone to be invalid, and we remove that from our price chart. Remember that trading Forex and trading different financial markets, you will see a lot of situations when liquidity zones become invalid. And following a simple rule that I explained, you can easily track the supply and demand zone invalidation in time. And now let's discuss one more specific liquidity zone that we did not underline. Look at the recent price action. You can see that over here we got a very important key level, and right here we got another one. And definitely we can see that here we got a supply zone that was respected by the market multiple times in the past. But what happened with that zone? It was broken. You can see that with the recent bullish movement, the market violated that zone. Supply zone was violated, and after the violation, it turns into a demand zone. And if previously selling orders were distributed within that zone, after violation, we will assume that buyers will start placing their buying orders within that area. So now it is a demand zone, but in the past it was a supply zone. Such an event is called a structure swap. Once we identified significant liquidity zones, we will apply the zones for analysis and trading. If you are holding an active trading position, remember that a liquidity zone can be a goal for your trade. And once a liquidity zone is reached, you can look for reversal. You can look for a signal to open a trading position from that zone. From a supply zone, you can look for selling, and from a demand zone, you can look for buying. Following the rules that we discussed, let's find significant liquidity zones on European pair. I will start with that. You can see that we have our first strong liquidity zone over here. Then we have a strong liquidity zone right here that is based on one single price level. Then right here we have another one that we need to take into consideration, and according to the rules here is that then we got a broken liquidity zone. Right here it was a supply zone, and after a violation it turned into a demand zone. Let's examine the supply zones now. We have one key level right here. We have also significant key levels right here and also right here. So here is going to be our next strong liquidity zone, our first supply zone. Then we got key level right here, key level right here, and based on these two key levels we have our second supply zone, and our last supply zone will be right here based on that high, based on that high, and drawing our supply zone here will be our liquidity cluster. After you identified all significant liquidity zones, do not forget to clean your price chart and remove all the horizontal levels from your chart, and then you can rely on the supply and demand zones for market analysis, for trading, for predicting market reversals, and for spotting accurate trading opportunities. Liquidity zones are one of the core elements of Forex trading. Your ability to recognize them properly is the key in predicting accurate reversals. I hope that today's tutorial demonstrated you that it is very easy to find these zones. Let me know traders in the comment section if you have any questions. Also traders, do not forget to subscribe to my Instagram, the link in the description below. Also traders, please watch my other videos.